Hey folks, in this video we're going to briefly cover some due diligence on Minds Biosciences Inc. NASDAQ drug. Let's get into it. First up, we have a company profile. Minds is a clinical stage biotech firm focused on developing targeted serotonin-based therapeutics for neurological and neuropsychiatric conditions. In simpler terms, they're creating drugs that target certain receptors in the brain to treat disorders like epilepsy, depression, PTSD, and anxiety. The idea is to do this in a way that is more effective and has fewer side effects than what is available today. Next, let's talk about stock momentum. Since the start of March, shares have seen an explosive rise, gaining several thousand% in value. This surge appears to be driven more by speculative momentum and interest in psychedelic-based therapies rather than new clinical or commercial milestones. However, investor enthusiasm about its differentiated pipeline and renewed interest in this field may help fuel continued interest. Now, let's discuss the pipeline and catalysts. Currently, Minds has three main compounds in development. First is 𝗕𝗥𝗚𝗏, which recently completed phase 1 trials. A move into phase 2 for a specific type of seizure disorder, likely Dravet syndrome or a similar rare epilepsy, will be a critical next catalyst. The company also has 𝗕𝗥𝗚𝗏 and 𝗕𝗥𝗚𝗏2, which are preclinical compounds aimed at treating mood and anxiety disorders. These assets provide optionality in the medium to long term, but remain early stage and high risk. Future value growth will depend on clear progress in later stage trials, regulatory designations such as orphan drug status, and potential partnerships or acquisitions. Next, let's talk about your exit. When is it time to sell? Given the stock's recent meteoric rise, now may offer a rare liquidity window for early investors. However, if you believe in the clinical prospects, consider holding until 𝗕𝗥𝗚𝗏 enters phase 2 and early readouts are available. A positive signal here could justify further upside and attract strategic interest. If you have a long-term view, selling may be best timed around a major licensing deal, partnership announcement, or FDA fast track, orphan drug designation, as these typically precede sharp valuation jumps. Finally, let's discuss risks to monitor. First, Minds has no approved product or revenue-generating streams, which is typical for a clinical-stage biopharmaceutical company. The company relies heavily on external funding to sustain its R&D efforts. This can be a time-consuming and expensive process, especially for a small biotech. Second, the stock's dramatic price increase in March has resulted in high volatility. There is a risk of share dilution, as the company may need to raise capital to fund its operations and further development. And third, while there's significant upside potential, there is also a substantial risk that trials may not be successful or that regulatory approval may be challenging or slow. In conclusion, Minds is a high-risk, high-reward play. The recent rally may offer a once-in-a-lifetime liquidity window for early investors, but long-term holders could still benefit from clinical milestones if the pipeline delivers. Your selling strategy should depend on your risk tolerance and confidence in upcoming trial data, especially the performance of 𝗕𝗥𝗚𝗏 in phase 2 trials. Thanks for tuning in and see you in the next one.